Hello and welcome to this introduction on quality indicators. We have initially developed our quality indicators for chart patterns, and the intention behind it was to help people that were unfamiliar with chart patterns to be able to distinguish between better quality patterns and ones that were less well formed. In this video I'll be discussing not only the quality indicators on chart patterns, but also how we've aimed to achieve a similar set of helping indicators with our other types of analysis, key levels and Fibonacci patterns. But first, let's start with the chart pattern quality indicators. There are 5 different quality indicators on chart patterns, and 4 of the 5 are measures of visual quality. They are the characteristics of the pattern that you can see yourself on the price graph. As traders gain more experience in using chart patterns, it tends to become second nature for them to immediately spot these visual cues. But for people who are new to chart patterns, these indicators can be essential to their trading decisions. Each indicator scores a value between 0 and 10, and these are illustrated graphically as a number of colored squares in this area to the right of the pattern display. For example, this pattern got a very high score for breakout, but not so high for initial trend. Let's look at each in more detail. The first indicator I would like to discuss is initial trend. This is particularly important to patterns that form during trending market cycles, such as triangles. The theory of charting suggests that the move after the pattern breaks out is often in proportion to the size of the initial trend. That makes this a very important indicator of pattern quality. This is an example of a strong initial trend, where the price graph made a long rally towards the first touching point of the pattern, in contrast with this example of a weak initial trend that had hardly any initial rally. In fact, it looks more like the initial trend came from the wrong direction altogether. The initial trend was supposed to be bearish. The second indicator, and I'm not discussing them in any particular order of importance, is clarity. This is a measure of the amount of noise and volatility that can be seen on the price graph. If the price graph looks smooth like this one, then you can expect a good quality rating. But if the graph is noisy or choppy like this one, then the clarity rating decreases. You may find that the clarity rating becomes more accurate with patterns of greater length. The next indicator is breakout strength. This is a score for the momentum with which the price punched through the support or resistance. Remember, breakout is only achieved when the closing price of a bar is outside of the support or resistance line, not the high or low. So if the closing price is a significant distance beyond the boundary of the pattern, the breakout is strong. Otherwise, if it crossed the support or resistance line only by a mathematically insignificant margin, we rate the breakout low. What it means in the theory, and more so in common sense actually, is that if the price has strong momentum, it betters the chances of reaching the target level. Then we have uniformity. This is also an indicator that tells us whether a pattern will look aesthetically pleasing. If the points on a pattern where the price touches the support and resistance lines are evenly or uniformly spaced, then it suggests that the psychology in the minds of traders had time to have its effect on the market. For patterns such as triangles, where the support and resistance converge, the spacing will naturally become closer, but this is still okay because it looks natural and normal. But when you find 2 or 3 touching points all scrunched up together in one corner of the pattern, even your instinct will tell you that this is not a very well-formed pattern and it is not good looking. So these first 4 quality indicators are really measures of how good looking the patterns are. There is a 5th indicator, but it only applies to exchange traded instruments where there is a value for the volume of trade that was made on an instrument. If it applies, like on most stocks, then this quality indicator is a measure for how the volume traded has increased towards the end of the pattern formation. Volume is a very important confirmation of the market's acceptance of changes in price. If volume goes up, it means that there are more people involved. More people mean more opinions and broader reach of the market psychology mechanism that these patterns are based on. These 5 are quality indicators for chart patterns, and then we have a 6th measure, overall quality. That is a simple arithmetic average of the 5 scores together. This average is also the quality score that you would see in the results grid. Now let's look at the Fibonacci quality indicators. There are 3 quality indicators for Fibonacci, and one of them is clarity, which is calculated in exactly the same way as for chart patterns, and it means the same thing. If the price graph is choppy and spiky and volatile, the clarity rating will be lower. The other 2 measures for Fibonacci are price symmetry and time symmetry. In the video called Fibonacci patterns, I gave the following explanation for price symmetry. Fibonacci patterns form where the price difference between certain turning points on a graph are in proportion to one another that is equal or related to the Fibonacci ratio. Because prices are discrete, meaning we count it in units of cents or pips, not in an arbitrary number of decimal points, it would rarely happen that we hit the Fibonacci ratio right on the spot. We would always be out by a small fraction. So for this type of analysis to be practical, we use a small error margin, and we say that if we are closer than that to the real ratio, then it is acceptable. But obviously, some patterns end up closer to the real ratios than others, and this is what price symmetry measures. How close we came to the actual Fibonacci ratios within the acceptable error parameter. Let's take a look now at time symmetry. When we look for Fibonacci ratios, we actually only pay attention to differences in price. This could mean that we have Fibonacci patterns that look rather awkward, especially if there were unexpected spikes or long, slow price movements. But if we were to look for the same Fibonacci ratios on the time axis, then the proportions of the patterns would be much more natural. So time symmetry is a simple measure of where the Fibonacci ratios on the price axis are mirrored on the time axis. This would automatically have a positive effect on the pattern's aesthetic appeal. With key levels, we only have a single quality indicator, which we've also covered in the video on key levels, and that is the number of touching points that have confirmed the level. There's also some small margin of error, so it is allowed for touching points to be within a small price difference from one another in order to be considered on the same level. The more points we have on the level then, the more times it has been confirmed, and the greater our expectation is that it will be upheld, or if it is breached, then the greater the move will be beyond it. So in summary, remember, the quality indicators are aids that most often help you to determine the visual quality of patterns. And they are not so robust that you can base an algorithmic trading system on them. You still need to be involved in the process, using your own judgment and making up your own mind what works for you and what doesn't. I hope this has been a helpful video, and if you need any further help, you can contact us on support@autocharters.com. We would always do our best to help you with what you need. Thanks for watching this video.